The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, for the most part, it was a quiet day on Wednesday. We did get a little bit of late session buying in the soy complex. Quarter wheat, though, kind of quiet around unchanged, a little bit lower in the livestock futures. But all in all, it felt like maybe some positioning ahead of what is to come on Friday with the USDA WASDE report, plus the government reopening and much more. Let's talk through things. Joining us now, Mike Zuzolo with Global Commodity Analytics. Mike, welcome back to the show again this week. And, it's going to be an interesting end of the week. I'll be curious our conversation next week in particular, once we get some of this data into the markets here. But it feels like we're kind of gearing up for whatever Friday might bring us, Mike.
Yeah, it's almost like you want to describe these markets kind of building from kind of an inertia to a momentum. And it's almost like feeling more like a dogfight at this point because of all the things that are being generated as news and new fundamental information coming through as well. And Wednesday was no different. We had fresh information from both OPEC and the Department of Energy about 2026 global crude oil production. Higher, not by a lot, but enough to reinforce that oversupply mindset for 2026 for oil. But by the same token, we had the gold storming back higher in the idea that the end of the shutdown was coming and it was going to bring back inflation. So we've got a lot of crosswinds and lots to talk about today.
Well, let's lead off with the WASDE. And again, USDA deciding they're going to put out a November WASDE report here. They moved it back a few days. It's going to be out on Friday. And there's a lot of talk in the trade right now, Mike. A lot of folks are wondering, what is this report going to look like? What is the data going to tell us? How many surveys were done amid the shutdown? There's a lot more question marks ahead of this WASDE report than I would say ahead of previous WASDE reports.
I agree. And I would say these estimates even add more questions than answers. And what I've got highlighted in green, Jesse, is what I wanted to draw you and the viewers' attention to this week. We've got yield levels going down in the top brackets for corn and soybeans. Not a lot. In soybeans, 0.4 of a bushel on an average versus USDA September number. But in the corn, we're going to essentially go down 2.7 bushels on the average trade guess. And yet look in the green columns, the ending stocks for Friday's report are supposed to be higher than what they were in September. And I think this is going to create quite a question mark in the marketplace. And I don't think they're really looking at this yet, because of Wednesday's price action showing the corn leading the soybeans higher. I think there's other fundamentals, including South American weather and some fresh news about corn, that are allowing us to give the market a bid. Because if I would have seen this and known nothing else about these markets, to have a lower yield and a higher entering stocks number, it points to only one thing other than the September stocks report having to be factored in because that came at the end of the month. It suggests lower demand. And I'm telling you, from my standpoint, Jesse, especially with some of the stuff that's come out recently in the last 3-4 working days, I just don't think we can afford less demand in soybeans, especially right now. I think corn could take it, but in soybeans, I just don't think we can afford less demand. So that's the key for me. Is it seems like going into this report with these estimates and this other news is the burden of proof is on the soybeans to see a tighter supply, given the fact that we've had a roughly $1.20 rally off the October lows. Last thing I'll point out is the yield expectations that I have in blue. I am lower than average trade guesses. I'm essentially running probably a month ahead of the trade right now. My last month's soybean number, for instance, was 52.9. It's 52.4 this month. Last month in corn was 184.2, or I should say September. This month is 182.4. And so I think I could go a little bit lower in corn, but I probably would not go much lower in soybeans based upon what clients have told me.
Well, I want to talk about the demand picture and think about corn, soybean exports. And this is where I'm going to throw two things at you here, Mike. One, with the WASDE, do we wonder if USDA adds in some of the presumed sales to China that we could see with the framework that's been announced but not signed? And then part two of this is with the government set to reopen, we're also going to get, we assume, this flood of data that we haven't had for several weeks, like export sales.
Yeah, and that's a big question mark because the White House just put out before we went on air here on Wednesday afternoon that they probably would not put out some major economic reports from October and just kind of skip over them. I don't know if the USDA maybe is still active enough that they can do that. But to your earlier point is, yes, there has been a flurry of Chinese buying. We feel pretty confident about that. But by this, and we've seen the Pacific Northwest price rally all the way up above $12 a bushel. And now at the Gulf and the Pacific Northwest, we're actually over or right with the Brazilian pork price. So that would indicate we got some demand, and we got some demand probably from China. But by the same token, we have to come back around to what our physical exports are right now, both before the USDA shut down essentially in September, which that's what these charts show, the export sales as a percent of the total USDA estimate for the marketing year. These two charts haven't been updated since mid-September. We were running well above last year and even above the 5-year average in corn. When we went dark on corn, we were running below both and quite a bit below the 5-year average in soybeans. Now, current numbers, as far as actual physical export inspections, we're still running plus 65% in corn versus minus 72% in beans. And keep in mind, Jesse, what we've seen generally speaking is the trade has bought beans and sold corn, especially after the China-US trade deal. And yet I've got fundamentals that would suggest the exact opposite is what the trade should be doing. Number one, Thailand's coming in reportedly, zero tariff on corn, buying 4 to 5 million tons between Feb and June. And that sounds like to me that's almost a lock because that's a physical agreement that we got done in Asia a couple weeks ago. Number two, we've got Argentine dryness. That's more important to the corn, it would seem to me. And then number three, we've got Ukrainians' corn price still at monthly highs. You compare that and contrast that with some private estimates saying not only do we have about 60% of Brazil's crop planted in soybeans as of the 8th of November, but some private estimates are saying Chinese port stocks are about 50% higher at over 10 million tons than they were a year ago, and crusher stocks are the highest since 2017. Add to that, the crushers are still crushing in the negative, and add to that, the soybeans still have a 13% tariff in place going to China. And so I've got a real issue with soybeans heading into this report and wondering whether it's really that valid to have this kind of a rally. So I just would reiterate, we need some good hard numbers here.
Well, thinking about the soy corn spread action and the ratios here, let's talk about this real quick. Dove beans, Dees corn, as we head into this report on Friday, what are you going to be watching here?
Yeah, this is a really key chart for me because what I laid out in this first eight and a half minutes is essentially the trade's been buying beans and selling corn. They probably should be doing the exact opposite unless we get a nasty report for wheat and the wheat keeps pressuring the corn and the wheat keeps getting pressured by the crude oil market. But you see in this corn chart in white, we've gotten back up above that 435 level again on a day trade on Wednesday. You go above 437, which is the recent multi-month high, and you're hitting a level that gets you above a trading range that goes essentially all the way back to July, August time period. So it would be, in my opinion, a breakout that I would expect to probably see some buy stops if we went above 437. And I think that's really critical, especially in light of the USDA numbers coming Friday. So that's the first thing I would point out on this chart. The other thing that I would point out is you see the November beans, even though they're in delivery, they're not trading a lot, they're still lead month futures and they're having a bit of a difficult time getting much above that 1120 resistance level. That also is going to be critical for me because the cash market and the no futures are the best thing to look at right now because they are essentially one and the same. Chicago November beans on the futures board being in delivery is a cash product. And so you'll know, I think, more likely whether the futures market is a premium or whether the cash market is a premium, and therefore the Jan futures need to go higher after NOV goes off the board.
Mike Zuzolo with Global Commodity Analytics is our guest analyst here today. Mike, you mentioned crude oil when we started our conversation today. Let's talk about crude and its relationship with SRW wheat and the correlation here as we head into this end of the week report in the middle of the month. What are you watching with this correlation right now?
Given the corn export demand and the corn ethanol demand and some of the news like we've gotten out of Thailand and also the Argentine dryness starting to come into focus, I think it makes sense to me, Jesse, that the same thing that usually happens with corn is happening again. The wheat market's trying to buck the crude oil market, but the crude oil market on Wednesday, as I talked about earlier, made a new 3-week low on reinforced ideas from two big players in the oil market, the Department of Energy and OPEC, that we were going to have an oversupply. And we will probably be, for 2026, if I had to guess right now, based upon my analysis, Department of Energy is saying $51, $52 a barrel in crude. And keep in mind, we're sitting 60 at times 65 when we were running higher on the futures. But they're looking more like 50, 51, and I can't argue that right now based upon what I'm seeing. The one thing I told clients and subscribers last weekend on a webinar, and please get in touch with me on the website, sign up for a free trial and say, I'd like to see your webinar, send me a password when you sign up. I really do feel as though the likelihood of military conflict in 2026 is double what it was this past year. And I put this year at 30%. I think the likelihood of a significant military conflict that would create a ripple effect, an impact in crude oil, I put at about 60% this year because there's so many new places and the old places are not dying down yet.
I want to touch on this soy complex a little bit more before we go to the livestock trade and just some of the world price action you are seeing here as we continue to watch this trade conversation. We watch crush here in the U.S., all these different factors that go into the soy complex. What are you going to be paying most attention to here as we head to the end of the week?
As we go above or meet up with the Brazilian price and we still have that 13% tariff still in place, this is where the report comes into play with the demand like we talked about, but it also comes into play with any kind of indications on domestic crush and biofuel demand. And this is really important because the Brazilian currency looks like to me, it's getting ready to make a pretty decent move one way or the other. It's kind of got a wedge formation in it. You and I have looked at that a lot. And if that Brazilian currency starts to weaken against the US dollar, that means I'm going to feel like we need a lot more support and demand coming from the domestic side to compensate for maybe some lost demand on the export side. But this chart, indeed, it shows by the US jumping at these price levels, if we're not factoring in a lower US yield, we must be pricing in some really terrific Chinese demand. That's the only way you can really read this chart, if you ask me, by the Brazil price being matched now by the U.S. Gulf price and essentially going from $390 a ton all the way up to $450 plus. I mean, we've at $1.10 essentially is $60 plus a ton, and that's really saying something this time of year.
Let's go over to the livestock trade, Mike. And obviously, we started the week on Monday with a huge move higher in futures, limit gains in fats and feeders. Tuesday, Wednesdays felt a little more like consolidation type of action, especially you look across the feeder trade. Let's start there. I mean, do you feel like it's kind of been a consolidation mode after that big up day? What are you seeing in the feeder complex this week?
I do consolidation and probably underpinned by cash, but more uncertain about the latest recommendation by the president to investigate packers. I was asked this by another media person on Wednesday morning. What's my sense on that packer comment that he made? And my sense is that he got enough strong, sound rebuttal, using a nice term, that he realizes you can pull down wholesale prices, you can pull down producer prices, but like we talked about, are you going to pull down retail prices by trying to nail the beef price like you did the egg price? Probably not. Doesn't work economically. And so I think what he's trying to do now is go towards the packer side and get the supply kicked up. And we're all about supply. We want the meat counters full of beef if we're cattlemen, and no pork or chicken. So that's not bad. That's actually very good if he could pull that off. Going back, though, to Monday, I think you hit something really huge. Why did we rally so sharply Monday? I don't think we could say it was anything but the idea that the shutdown was going to occur. And the end of the shutdown was a double shot in the arm for the cattle, that it gave the Wall Street the ability to rally sharply, and it gave the idea back to the market that the SNAP benefits were going to come back online. This is a huge piece of the puzzle to me in my analysis, Jesse, because it tells me I was on the right path, that it's not just about supply in the cattle market. It's now also about demand in the cattle market and what the trade is looking at in terms of price discovery. 2025 was almost all about supply, and demand was Teflon. It was stellar. You couldn't crack it. I think we're starting to feel a little bit more of a nervousness about demand and consumption as we go into 2026. And I think those SNAP benefits going away and Wall Street reacting to the shutdown, that was a key indicator to me.
Well, and I think about this as well. Amid all of the volatility in futures, that box beef price, I mean, that's something that we've tracked closely when it comes to demand. And hasn't been a whole lot of change there, Mike.
No. And this is a huge piece of the puzzle when it comes to whether we're similar to 2014, 2015 or not, because this is the transition period we experienced during that time period where we knew supplies were going to tighten for the next year and a half, 2 years, but the market still fell. But are we different this time? And this box beef price has found some support. And we've also seen, talking about that feeder chart that we just looked at, we've also seen feeders regain the leadership role and have supported, if not led, the fat cattle higher. That's also very critical in the big picture cycle. So when you look at this fat cattle chart, I really would strongly recommend you look at it from a standpoint, okay, the cycle is against me in purple because we're trending down if that cycle's accurate, but the box beef price could be heading higher and compensate for that. We didn't see that in 2017 through 2020. Box beef prices were flat, and so that cycle worked. But from 2020 to 2023, we didn't see the box beef prices give up. They held strong, and they actually led the live cattle back up, and we did not have a bad cycle at all. So it's time to start talking not just about the cycles, but also about the box beef, because we're getting into November, Thanksgiving. After Thanksgiving becomes the primary beef time period. And I don't want to ever, when we talk, Jesse, forget to talk about winter weather could be the most important winter for calving that we've seen in a generation, in 50 years, because that's how low our cattle inventory is.
That is an extremely excellent point that I think we're going to have to keep an eye on over the next several weeks and months ahead. And another thing that I want to throw out to you too here as we kind of bookend our conversation today, and this is where I could rope in the hogs too, with a WASDE report coming up here on Friday, we typically get some livestock type of data in these reports. And I don't want that to get lost here either, because could any of those numbers potentially impact the protein complex here at the end of the week, Mike?
I'm glad you brought that up, because I wasn't going to talk about it because we may not have time, but we've got that Argentine beef, that quadrupling of Argentine beef. We don't know what was discussed between the U.S. and Brazil. We don't think anything has happened, and we don't know anything about the Mexican feeder cattle yet. These are these three things we want to keep an eye on very closely these next several months in all these WASDE reports, unless we get a newswire or a USDA news release stating something specific. They may slip some numbers in there, and we'll have to stay on top of that.
Good thoughts. If folks were to reach out and talk with you, take a look at your analysis and much more, Mike, what's the best way?
Globalcomresearch.com is the website to go to, and it's Globalcom with 2 M's. Product services for 2026 is on there. And also, like I said, you can get a 2-week free trial. There's a little comment box there. And when you sign up for a trial, let me know if you want to take a look at the presentation.
Globalcom with 2 M's, research.com for more. Mike Zuzolo, Global Commodity Analytics. Always good to talk with you, sir. And I will look forward to seeing you and talking to you in person next week at the NAFB convention in Kansas City. We'll see you there.
We're going to tear up Kansas City, Jesse.
I got some barbecue on my mind. I know that, Mike. Thanks for joining us again, my friend. Always appreciate it.
You betcha.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.